discussion, a close discussion on a subject very close to our hearts, which is the labor reforms. Let me start out by congratulating one and all on a reform well delivered for the last 75 years. Many of us have voiced our concern about the complexity of labor laws, the rigidity of labor laws, and we'll go through some areas where significant reform has happened. And it's so heartening to see that government has finally heard it and the new labor codes are live. So joined with me today, I have Madhu Damodaran, a leading voice in the area of labor compliance in the country. Madhu serves on the board of Team Leads Regtech. He's also a member of the Central Board of Trustees at EPFO. He's a part of the CII's National IR Committee and Karnataka State Council. He's an executive committee member of EFI and regulatory committee of Indian Staffing Federation. He's been doing a lot of good work on the area of labor compliance, and I thought it would be a great idea to have this dialogue with him and talk about what next. How do we prepare for what is in the offing? What has changed? How do we decode what has changed? And some of those ramifications. So we promise that the next 59 minutes will be very eventful, and we'll go through a lot of lower level details, and hopefully will help some of you get better in control of your compliance processes. All right, so I do have a bunch of slides to set the context, and then we will quickly move on to a dialogue. For some of you who are looking for a little bit of a history here, the country has had 29 Central Labor Acts. 4 of them were written before independence. The oldest one, I think, is written in 1923. 4 of them were written right at independence, so including the Minimum Wages Act of 1948, Factories Act of 1948. They were all written around independence. 6 were written in the decade of the 50s, 4 in 60s, 5 in 70s, 3 in 80s. And guess what? Out of the 29 Central Labor Acts, only 1 act was written in 2008, which was in the current millennium. All others were written in an era where the country did not have telecom, did not have internet, there was no concept of AI. Most of the processing used to happen in a very different way. The concept of gig worker, the concept of fixed term worker, home-based worker, remote work, all of these were not there. So for the last over 75 years, we have dealt with laws that have been written in a very different era to try and shape the future of India's economy in a very different era. So hopefully, labor codes help us solve that problem. Government initiated this complex simplification exercise, the rationalization exercise. If you look at the history, it started in 1999 during the Vajpayee government. The Second Commission of Labor was set up. It came up with its recommendations in 2002. There was a long pause until 2019, when the legislative process to table the 4 codes, which was a part of the recommendation by the Second Commission of Labor in 2002, started. So in less than a year, all the 4 codes, which is Code on Wages, Code on Social Security, Industrial Relations, and OSH and Working Conditions, they were legislated. And guess what? There was another long pause. Center notified draft rules. Several states did the same, and the industry kept waiting with bated breath on when some of these will see the light of the day. And finally, on the evening of 21st of November, out of a sudden, we saw that labor codes were notified. So that's where I think this is the gargantuan task ahead of us. While a lot of things have become simpler, easier, a lot of definitions have been harmonized, a lot of compliances have been removed, the duplication overlap in criminality has been addressed, but the transition over the next 120 to 180 days requires meticulous planning and meticulous execution. And that's why we are here today to help discuss some of these items. So what should we expect? First, the central rules are still in the draft stage and they should be notified soon. We don't know when. Many states have already published draft rules, and you will see some of this data in the next slide. A couple of states are yet to publish their draft rules. So hopefully Once the center notifies the implementation, the states follow suit. So next few months are going to be extremely eventful. A lot of notifications are likely to come out. Different states will start getting the procedures, the forms, the formats, the deadlines, and the specifics as far as their compliances are concerned. So we all need to watch out for that. So what do we expect in the next few months? First, the states have to finalize and notify their rules. Employers and employees should anticipate phased enforcement of variety of compliance artifacts, including registrations, registers, returns, and compliance systems, and wider rollout in the next few months. If we move on to the next slide, breaking it down from the rules perspective, 36 states and union territories have already notified Code on Wages. One is yet to draft it. Similar numbers are there for Code on Social Security, OSH, and Industrial Disputes Act code as well. About 35 have notified, and 2 of them are yet to draft. So as you can see, majority of the states and union territories are done with their drafting process. Once the center notifies its rules, hopefully all the states will also follow suit, and we should start seeing this ball rolling. How do we decode this situation? First, there are areas where rules are not required, so they become effective right away. Things like compensation, where all the statutory calculations are driven, the ESI calculations, the PF calculations, fixed term employment, gratuity, definition of wages. All of these are areas where no further rules are required to clarify. As per the Gazette notification, which came on the 21st, many of these things have become live right away, and we need to all start planning to migrate from the legacy to the new crowd. Then there are items which are more procedural in nature, which includes formats of the forms for record keeping, filings, frequencies of filings, procedures for some of these record keeping requirements. A lot of these are typically embedded in the rules. We already have access to the draft rules. They may again be published for a round of consultation, we don't know. From our liaise with the government, it seems like in the next few weeks, we should see some action there. They should come out with a round of consultation, a quick one, and then it should become live. This is something which we expect in the next few months. During this time, we all have to prepare for transition. We have to review and map our workforce classification, understand the definitions, employee, worker, fixed term employment, contract worker, gig worker. All of these are definitions that we all have to clearly understand, identify our current workforce, map these definitions within that. We have to assess our current wage structure, identify gaps so that we can realign considering the unified wage definition which has come through. We have to look at our HR and compliance systems and their readiness, which includes, can they produce the new formats of registers and for record keeping, variety of documentation, industrial relation processes, safety standards. So we have to recode our compliance systems so that some of these items can be taken care of. We also have to plan internal change management, which includes policy updates, training to internal people, team, our employees, system upgrades of a variety of kinds. And we also have to track the state-wise rules notifications and factor the differences into multi-state compliance planning, especially if you are a multi-locational organization with footprint in different states. So that level of planning can also be done. Now, the good news is that we as a company at TeamLease Regtech, we are doing this on behalf of all our customers. And if any one of you requires that help, we'll be happy to provide that assistance as well. So keeping an eye on the ecosystem, scanning it constantly, understanding and decoding the scope of what has changed and how you should go about doing that is something that we are doing as well. Let's move on. Some of the broader areas which are changing, and during the course of today's conversation, Madhu and I will throw more light on this. The definitions have been harmonized. Earlier, wage versus a worker versus what is hazardous work, all of these were definitions which were not very clear. And in the new code, a lot of clarification has come through. The words like employee where managerial and administrative role has been given as a key criteria. Worker, which was earlier called the workman, where manual, technical, operational, clerical workers were in that category, has to be clearly classified because it creates the eligibility for overtime, retrenchment protocols, social security measures, calculations, safety and dispute resolution methods. All of these are highly dependent on who's classified as a worker versus an employee. There are specific sectors such as IT and IT enabled services where there may be an ambiguity in classification of worker versus an employee, owing to the nature of the work. A lot of people in those sectors do knowledge work and so on. Remote and hybrid applicability for OSH and working hours is an area that needs to be understood better. All of these are areas, many of them we will cover as a part of today's dialogue. And like this, we will continue to have further dialogues in the future as well. Then from a sector point of view, manufacturing, where majority of the employees falls under the category of worker, where high safety and shift work is required. A lot of IR related items are there. Items are also there in contract worker and fixed term employment, which have already become live. And there is DPDPA, which the rules were notified relatively recently, and there will be implications on the CHROs because a lot of items under the rules will have implications on what data, how you are sharing, who has access to that, and so on and so forth. So while the labor transition is happening, there is a corresponding security transition also, and many of the items for all of us in the room have to be done in line with our DPDPA line items as well. Moving on. So here are the questions that Madhu and I will deliberate on. First of all, are my existing HR policies and documentation, which includes the appointment letters, compliant to the new codes? If not, what changes are required? So that is an area where we will have a chat today. What is the financial liability of compensation restructuring in line with the new codes? How much additional provision should I need to maintain for gratuity, leave encashment, bonus, and provident fund? How will the take-home salary of my employees be affected due to restructuring? A question that you're likely to face from all the employees soon. Post-implementation, how do I regularly comply? How do I produce the right formats of registers and returns, and so on and so forth? Is my HR team trained? What are the implications of the codes on the training of HR team? Are my contract workforce structures compliant as per the new code? Has my implementation been reviewed post-implementation? Have you done any review to make sure that there is no gap left and you are completely in compliance with the new codes? These are areas many of us have questions. We are intrigued by these questions. So let's start this dialogue. Well, Madhu, looking forward to our chat today. Let's start with the building blocks here. Some of the key definitions have changed.
Yes.
Let's talk for a few minutes and see what the new definitions look like. What do they mean for different sectors, and how should people start working with them?
First of all, thank you, Rishi, for having me on this dialogue, and thanks for a gracious introduction. And yes, finally we are there. Yeah, we had waited for this long, and we have been looking for this moment of reckoning, and here it is. As you rightly said, it kind of suddenly, I think we kind of, because of the 5-year gap since the codes were passed, we were all kind of lulled into, okay, there was that initial frenzy in 2020. I myself remember conducting so many webinars and all of that. And we kind of got
I for one, had kind of given up.
Yeah, absolutely. And some of the reactions of my CHRO friends is that where is this coming from? Is this thing. So yeah, maybe it caught us all by a bit of a surprise. But all said and done, it is here now. So as you rightly said, now let's look at where we are and how we are. And the important part of it, as mentioned by you, are the definitional changes, right? So any simple term like wage had If there were 40 acts that were submerged into these 4 codes, then 40 definitions of wages were there. And from there, we are suddenly looking at one single definition for wages, and that has its implications. And some of them we might like, some of them we may not like, right? But that is one. But before coming to it, there are other very, very critical philosophical at a level. Let's say, for example, who is an employee and who is a worker? You rightly pointed it out. That's a definitional change. Again, it is not act by act like or labor benefit by benefit as it was earlier. It is now for all labor provisions, whether it is a certain requirement an employer has to do or whether it is a benefit somebody is eligible for. Your definition for wages, your definition for employee or a worker is now uniform. And the employer as a definition, right? Earlier, it was the person who's in charge of an establishment and all of that. But now they have specifically included a contractor also as an employer. Let's say there is a contractor who has deployed worker in your establishment, then that contractor is also an employer. This is we will discuss what is the significance of it, how it will impact. So this is also an interesting change in definition. But mother of all definitional change is the industry definition, right? So though whether it is technically right or not, some of us in the services industry or in ITS, we're all under the belief that Industrial Disputes Act doesn't apply to me because I'm technically not an industry. Though Supreme Court has put that thing to rest by its own decision almost 20 years back, but we all had that opportunity and we all used to dispute that. Now that's kind of killed. The industry definition is very, very large, and it kind of nobody can escape. If you're doing a business, then you are an industry. It's as simple as that. So that's a
Can you
huge
explain in a minute why that definition mattered so much?
industry. Yeah. So for example, let us say I will give an example with the case law, right? Recently, one of the IT company, not recently, couple of years now, one of the IT companies disputed the fact that their IT employee, who technically is a supervisor, and they took he went and complained to labor tribunal. Labor tribunal accepted the case. They took it to they contested it in the labor tribunal. No, he is not even. I am not an industry in the first place because I don't fall under the true definition of industry under this thing. And there the tribunal went into it and then said, no, please refer to the Supreme Court decision of BWSSB versus Rajappa, and then see what if you look at it. It's a very it includes any business or commercial activity which is done for profit, and there is a cooperation between employer and employee. Then it is an industry. That interpretation of Supreme Court is what is verbatim introduced into the courts now as an industry, right? So that's where we are not given any leeway to argue. Of course, this matter has been taken to Madras High Court, so we are all waiting for the decision there. But now I don't think Madras High Court decision will matter on that. So that's the significance of that definition.
Excellent.
Yeah. And then some of the concepts introduced are new. This thing, fixed term employment has been defined. And I think that's a huge relief for employers who really want or aren't looking at hiring or looking at hiring for a surge in production, trying out a new product, whatever be. There are so many situations where you're not sure whether you want to get a set of employees and then you want to stick with them. Here are the opportunity now. And I think for employees also it's an opportunity, right? If they, while traditionally we think that no, an employment is for life. Of course, for life employment is gone. In my year, having retired, I have done almost 10 jobs. So that's not gone. But generally, the assumption is that we are here for good, right? That is, I don't think today's new age workers are Gen Z or whatever you call them. I don't think they don't care really. So for them, probably this is a good opportunity. Okay, let me take a 6 month this thing and then try out and then probably I'll go. Then he doesn't have the problem of should I serve a notice? So what will my employer think and all of that? Because there is this fixed term and both sides understand that, right? From that perspective.
Absolutely. In fact, in the developed world, from what I understand, 30 to 35% of the people are actually on contract basis only, and it's not looked down upon as traditionally has been the case in our country.
Absolutely. I think it normally in the earlier it used to be with the maturing of an economy and people coming into the job market and all of that. Here and it is kind of heralded also due to the Gen Z, the new this thing, technology, AI, so many things come into it, right? There are people today. You ask my daughter what you want to do after your law program, no, I will go and do a 6 month stint somewhere and find out, right? So that kind of a thing is addressed is what I think that's a big change. Then there are a few very small but then significant, for example, an appropriate government definition. I'll just give you one single example how sometimes you can even call it ludicrous it was. For example, Maternity Benefit Act, the appropriate government is central government for circus and mines industry. But you take Payment of Gratuity Act, appropriate government for a company or an employer with establishment across more than one state, it is the central government, right? So if there is a change has to happen with regard to gratuity for such employer, it has to be notified by the central government, right? And when Maternity Benefit Act amendments came, where the crush and those provisions were introduced in 2017, all state governments are waiting for central government to issue notification. Then finally, the central government told them, "My dear friends, I am not appropriate government for other than these two industries. You need to do it." So these are all very vague situations with this. So now that is put to rest. It's uniform definition. Appropriate government for central government is only for those industries they control. Maybe.
Thank God for that. I mean, there was so much confusion, so much ambiguity, so much complexity that came out. The
Yeah,
way wage worker and some of these terms were defined,
absolutely.
their relevance, their impact on the calculations, all of those hopefully have been put in the museum where they belong. And the
Yeah,
new era of a clean, simple way of defining things and taking them forward, obviously, it will take some time to get used to them. But I think we're moving
absolutely.
in the right direction there.
Absolutely. Just to add there, like what you rightly said, for payment of gratuity, when the Karnataka government last year notified saying you need to get compulsory insurance for gratuity, people were not sure. Technically it applied only to factories in Karnataka, but all other employers who had more than one establishment in more than one state didn't apply. But everybody was going through, they were not sure. In fact, I had to do webinars like this to clarify this. So as you rightly said, it's clear now. So we know exactly what it is, who can give me my rules and who cannot, and all of that. And couple of other things I will just quickly add. The concept of inspector cum facilitator, with a very clearly stated provision in the law saying that you, before you are prosecuted, you need to be given an opportunity to show. Now itself show cause is there, but here it is to facilitate. They comes and says, okay, you're not compliant. He explains to you, and then he goes to the next level of show causing, right? So that's a interesting this thing, but of course that requires
That's
a
a
lot of
huge
mindset.
thing because, as per our data, there are 13 unique inspectors just coming from various labor laws that can come and inspect you.
Right.
And with this change, that hostility which has been deeply entrenched in the country's laws, particularly labor,
Correct. Yes.
is going to be addressed. Now, just putting some numbers on it, among the
Yes. Sure.
69,233 compliances in the country across 1,536 acts and rules, 32,000 came from labor. Among
Yes.
the 32,000 compliances, about 17,000 had criminality. So more than 50% of the labor laws in the past had criminality. And guess what? About 8,000 out of them just came from the Factories Act of 1948. And I'm referring to the Union Act and the corresponding state rules
Correct.
put together.
Correct. No, you brought an important aspect of criminality, and that's where one of the another big change is most state governments had introduced into labor law, but it is now there in the courts as such applicable to all these compounding of offenses, right? So you can go on compound, and therefore for minor flagrations you don't get hauled into the court and all of that. And that's an important aspect. I think that is also that brings in an element of what do you call ease of doing business, not really worried about, okay, I didn't put up a abstract, and then for this guy has taken me to court, and then do I fight it all the way up to the Supreme Court to get that charge sheet removed and all of that. Probably there is an easier way of getting it compounded. So these are the broad definitional changes which really apply across all courts and will have a significant impact on how we kind of do implementation of policies, how we are looking at what are our salary structures, and all of that. So that's the uh, significant definitions that matter for a discussion like ours. Of course, we may have to do code-wise discussion probably in future to go into every detail of that.
And we will absolutely do that. So I think there are 1,000 people on this show today, and I'm sure so many people are looking for specific guidance on what they should be preparing for to make sure that their organization continues to stay on the right side of the law. So let's switch gears a little bit from the basics of what has changed and how definition harmonization is happening to, if you are a company, a manufacturing company, for example, how should you plan this transition? What should you do now? What kind of actions should you take up? Right from reviewing your compensation structure, statutory calculations, changes to your payroll systems, understanding your obligations on the returns registers and challans, training and communication to your internal employees, communicating the updated structure to employees. All of these are things that I'm sure are puzzling many of the people on the call. So let's talk about, if you are a company today and if you are a part of the HR team responsible for managing this migration, what should be your approach?
Sure. So let's kind of follow the same path as the critical definitions that has changed and then see how it impacts. For example, let's take the employer versus worker, right? In manufacturing, I think it's fairly simple. We will be able to quickly identify who is a worker and who has got supervisory, managerial, and administrative capacity. Therefore, who's only an employee, not a worker. But there also, just to add a twist to the discussion, let's understand a finance employee, let's say, who's sitting and doing accounts payable and accounts receivable. Let's say he sits there and kind of feeds in his invoices, etc., etc. You don't know. Sometimes during an audit time, he may be doing it through the probably the day and all of that stuff, right? So he's definitely clocking overtime, but we might generally have considered he's not a worker and therefore he is not eligible for overtime. We may have to do a lot of rethink on all of those kind of roles. Essentially, basically, we need to be understanding clearly where all your workforce fall between from an employee or a worker, and therefore probably each one's job description, because the same example I gave you probably exercises a lot of discretion. He decides whether a particular invoice is as per contract, is particular invoice. So there is a lot of, probably there is an opportunity to define him as a person performing a duty in the administrative capacity, right? Then he's not a worker. So these kind of ambiguities we need to look at, whether we are clear as to where our employers are, all employees, which category they fall in. Therefore, you are doing correct compliance when it comes to the basic requirements like working hours, overtime, leave, etc., etc. So
So all
that's
the downstream compliances, as per you, are going to be determined by this fundamental classification, which needs to be done upstream. And if
absolutely,
this classification is ambiguous or is incorrect, then all your downstream compliances will suffer.
absolutely.
So one
Because,
needs to
yeah,
take a step back.
yeah,
If you have 1,000 people, make sure you go back to their job descriptions and start looking at the clear definitions. Some of them will be clearly on this side, some of them clearly on the other side. There
correct.
will be a number of them which will be on the fence, and you will need some help and supervision to make sure that you can make that decision, whether there is discretion, whether there is decision making, whether the nature of the work that they are doing has a higher value as compared to clerical and staff, and so on and so forth. And based on that, you will need to first classify your workforce into these two broad buckets of whether somebody is a worker or somebody is an employee, because all downstream compliances, believe it or not, will be dictated by this clean classification.
Yeah, yeah, absolutely. So, give you an example on downstream compliance. For example, in fact, according to OSH code, any establishment employing more than 100 workers has to have a cafeteria. See, we used to have this concept only in Factories Act. Now, Factories Act is merged into OSH code, and OSH code defines establishment as well as factory, but it is applicable to an establishment also which is not a factory. So there in a established service establishment, if you don't have this classification, you don't know whether I have to have a cafeteria or not, right? So those are you rightly put it. I'll give you one single example today. It's practical example. Today I was having a conversation with a CHRO of a typically a services company, And when I was saying, can you give me an example? I think I know them run a call center. So I think in call center it's pretty easy, right? Because all the call center people who come and take calls for 8 hours, they are workers, and then their supervisors and above them are managers. She said, hold on. I don't think that is true. I said, why? Because most of the call center guys I employ, they are into sales. So they actually exercise a lot of discretion whether this particular customer who's called in is eligible for what product suits him and all that. And so it is not a typical call center as somebody calls and then say my instrument is not working, how do I get it done? It is so. And then I also took back and then said, yeah, you have a point, but make it very clear in the appointment letter, in the job description, that particular call center, he make it very clear in your job description document saying that this involves decision making, this involves administrative level tasks to be performed. Therefore, he or she is not a worker. So that is exactly. So I
So
used
very
to
interesting point that these definitions have such wider impact. So the bottom line, if there's one takeaway from this dialogue for our participants today, make sure that all of you are working towards classifying an employee and a worker clearly. The job descriptions have to reflect that, the appointment letters have to reflect that, and at the time when somebody shows up and asks you a question, you need to be able to justify why someone is a worker and why someone is an employee. If any one of you needs help, please reach out to us. We'll be happy to provide some help here. We have a lot of experience doing something like this.
One very critical downstream implication is IR code. IR code has all these aspects about how do you manage a dispute between employer and employees. IR code does not mention worker employee; it only mentions worker. So if this classification is right, then you understand the implication, right? Whether they can go and form a union, whether they can come and do a strike. All of this has very, very significant impact. Sorry, go ahead.
No, wonderful. So I think hopefully our participants have one thing which was very clear for this transition, that they have to start. This is the mother of all uh, starts that they may want to have. The first activity is make sure that classification is clear. Okay, we've sorted that. What is the next item they should do?
I think the next item everybody on the call is looking for is what is the impact of the wage definition, right? Wage definition, for all the complications it has, it is also very simple. What is the government intention? It's very simply says, boss, for all your calculations for social security like PF, ESIC, or maternity benefit, or let's say gratuity, all of that we want to be clear about the base wage, and they don't want too many opportunities for employers to structure the wages in such a way that that base is too low for any good, right? So we have seen at various instances where employers do 10% of their total CTC as a basis, and therefore PF is at a low number and all that. Essentially, the wage definition makes it clear that 50% of your total wages should be the base for all calculations under the labor laws, be it gratuity, be it EPF contribution, be it ESIC, be it workman compensation, everything, anything that is even maternity benefit, overtime, leave, all of this calculation will be based on the fact that if your 100 is your gross wages, of course you have different CTC, all those things, but let's assume a gross wages, 50% or 50 rupees of that is the base for all these calculations. So this is going to make a lot of difference, right? Particularly in gratuity, I think that's where industry is pretty worried. Is fact that today under the Payment of Gratuity Act, we all assume that the base for gratuity is basic plus DA. Some of them even take only basic, right? Which is anywhere between very badly skewed salary structure 20% to let's say 40%, right? If you are at 40%, then this jump from 10 to 50 is not a big deal. But if you are at 20%, suddenly you will have to pay gratuity on a base of 50. And take for example my example. I regret that I retired last year. I should have regretted retired this year, because my base pay, let's assume, was 100,000, based on which is my former employer gave me gratuity for the 9 years I worked for them. But if you've taken 50%, that's more than the double. The base would have been more than the double. I would have got that much more gratuity. So
So
that is
it's
the
it's very
impact.
interesting you say that. Now, while we all understand that codes have been implemented prospectively, gratuity is an area which is actually retrospective in nature.
Yes. Just give you
Because
my
if
own
somebody is
example.
employed with us for say 10 years and they
Yeah.
are retiring next month, then technically that whole calculation changes.
Yeah, so like in my this thing, I joined my last employer April 1995, and let's assume that I retire 1st January 19 to 2026, let's say, right? Now for this 10.5 years, now the gratuity will be calculated on a new base for the entire 10 years. Correct. So that's why this impact is going to be felt. It impact has to be will be a calculation, and probably the all of them is not an immediate payout. But as we all are corporate citizens with all the provisioning norms and accounting standards, we will have to re-estimate the liability and put that into accordingly value that, and then consider that into a profit and loss account balance sheets. So that's an important exercise everybody has to do. But going forward, instead of repeating that this thing, probably you have an opportunity to restructure, kind of do your wage structure, your components, what are the components you're using, and therefore probably there is an opportunity to limit your this thing. I'll just give you an example. Let's say in 100 rupees, your basic is 40 rupees, and then you have special allowance of 625 rupees. So your gratuity base will be 40 plus 25, right, in the new wage structure. So you can then you have an opportunity probably relook at that special allowance and construct that into various purposeful allowances, and then see whether there is an opportunity to do it at 50. So gratuity base at least remains within 50, not the 60 or 70 or 100% that it sometimes can be.
Interesting. So there's clearly an opportunity for companies to use this and review their compensation structures. There will be a corresponding change to work with their payroll providers and make those changes as well, because some of this will have a downstream implication. Do you think most companies are ready, clear on how to do this? Do they need help? Should they seek help?
My experience with what I was doing during around 2020, when it was kind of a hot topic and before we got lulled into, uh, and also some of the conversations I had a dinner last Friday with a couple of my actuarial friends from the Institute of Actuarial. They were saying, Madhu, none of our clients are prepared for it, is what they said rhetorically. But they also said there were a few companies who had kind of restructured so that they moved that gratuity base to 50 a person instead of where it was. Therefore, what has happened is over a period of all last 4 or 5 years, they already re-estimated those liabilities, and probably they eased themselves into this. But I think more than a majority of employers have not been prepared for it.
So there are two actions here clearly. One, all the incoming new employees, they have to have a structure which fits the codes. And then there are employees from the past. They have to be brought into the new structure, right? Because there are implications of that. The CFO is involved in this calculation as well because provisions have to be made in the books. So the CHRO, CFO, rest of the team, some consultants have to work together, put
Yes.
some numbers in a spreadsheet and come up with that new liability which needs to be added to the provision. Is that how they should
Yeah,
approach
absolutely.
it?
That's how it should be. And also do a estimation, future calculation, how do they want to shift it? And similarly, there will be impact on PF, right? Because again, you will have to pay. What has happened is since in 2019, there was a Supreme Court decision which is famously referred to as Vivekananda case, wherein the Supreme Court kind of literally told all the employees saying that, boss, you need to pay PF wages on all universally, normally, and ordinarily paid wages, right? Which then many employers didn't want to take risk of not including. So literally, like in ESIC, all allowances were included for calculating PF. Probably now there is an opportunity to relook at, and say some of the allowances which are paid for reimbursement or close to reimbursement, like a conveyance and all of that, because they are all excluded allowances in the new definition. There is an opportunity to relook at the cost, but impact, I would sense, so you may also agree, will also be on those employees who have got a very low basic in their this thing. So there, obviously, the impact will be on the higher side, right? But it all depends. But that PF ESIC, I had a very interesting this thing. While, for example, ESIC today is calculated on gross wages. Let us assume Madhudamuran is now today getting 23,000 rupees, which is above threshold. But if I add a HRA component, which is 3,000 rupees, suddenly I am 20,000 rupees because this HRA is excluded in the new wage definition. So in one of the scenario analysis that we were doing, we found that in a population of about 6,000 employees, about 500 were now covered at ESIC, but suddenly that number has grown up to 1,500. Right? That borderline minimum wage population that suddenly has come up. So this throws up so many questions, right? Some companies, for example, whether it is ESIC covered or not, they extend the group medical insurance cover. You now so many people are coming. Should I pay both ESIC contribution at 4% and also the premium, which is very high these days? How do I manage that? And if you take either way the decision, communications, structuring, letting in why you are doing it, all of this becomes an issue. So you need to be very, very mindful of all of this, and you really need to very quickly look at what is my current pay structure for different classes of my employees, including your contractor, whether your contractor is also paying correctly or not, because PF, the fact that it may come back to the principal employer still exists. So you may have to do this analysis pretty quickly and do that, because this is, as you rightly said during our earlier discussion, this definition of change does not require a rule to be gazetted by this thing for the, because with effect from 21st November, that change is already come into place. You need to really look at it and then do this. So that's where the action is going to be.
So clearly, these are emergency actions which require to be reviewed now because they've already come into effect as of 21st November.
Correct.
Tell us a little bit about what happens to the take-home salary of employees with the new definition.
Very interesting question. So all of this that we discussed, gratuity we'll discuss later, but PF, ESIC, whether it goes up, and today almost all employers are on a CTC basis. Now the impact on take home will be the decision that employer has to take, whether he wants to pass on this to the employee, then obviously the take home will get hit, right? If he doesn't want to pass on this, then his cost is going to increase, right? So that
If
is
we were to
that.
break it down, say 100 rupees was the CTC in the erstwhile scenario. Let's take some numbers and drive a point as to what is the quantum or what is the
Let's
percentage
assume
change expected.
PF earlier was 100 rupees. 40 rupees is where he is calculating the contribution, right? So 40 into 24 or 12 is where 12 comes from the employee. That's a deduction. So that 12 rupees is gone, and employer's contribution in a cost to the company model will again another this thing. So it will be 76 rupees is what will go. Let's assume this, because of the new wage definition, it has become 50. Then the 12% is what now? Is going to be 50 rupees, and 6 plus 6, 12. So that will be that much more, 2 or 3 rupees more will go out of his 100 rupees, right?
Basically, in your past example, the 40, which was the base for the calculation, has now moved to 50.
Correct.
And because the base has shifted to 50, some of the statutory deductions will go up. So from 100 rupees, when you remove the statutory deductions, to that quantum, the amount will come down.
Come down. Now, if the employer passes on both his increase also in the CTC concept, that to that extent the CTC, the take home will come down, right?
So basically, it's a calculation that every company has to take up for every specific individual. What are the ramifications on employee communication of this change?
Yeah. So if let us say somebody who's on a minimum wage this thing, and then you go and make this change, his take home is going to get hit badly. And you have a huge call to make it from an HR and IR perspective. Because if you go to, let's say you are unionized, you go to the union and say, boss, this is what I'm paying, I'm going to pass it on. Obviously, it's not going to sell. But even in not a unionized situation, if you have larger population which is here, this is going to create that sense of disgruntlement. So you need to be very clear as to how do you want to pass on and how do you communicate. So the HR and IR managers and IR team have to be very clear as to why these decisions are taken and how you are communicating, and why it is taken, and then say for example you take a decision to say pass half of it, pass this thing so that impact is not felt fully, or probably you align it with the next year's increment, right? And therefore, and probably do an adjustment there. Then it becomes even more complicated because then it gets hidden in the overall race, and he doesn't get to see what is the array. You gave me 20% hike, but I don't seem to be having that much money in my pocket, right? So that is why it becomes very difficult. First of all, understand the impact of this and how it impacts individual employee by way of a take home, for example. And also there is a point of higher accretion to the social security, that also you need to be aware of that and then communicate. So with all of this, it becomes very difficult for HR and IR, and also at the leadership level, for everybody to understand what is the implication at an individual employee level, at the business unit level, and at the corporate level, so that it has so the preparation for this is going to be a humongous effort.
So clearly, there are communication implications. There is beyond planning. How do you communicate? How do you package? How do you bring in the statutory implication of what is being done? How they are going to benefit in long term because the so-called social security contributions are correspondingly increasing. So their savings in long term, the pensions in long term are going to positively change. But money in hand today becomes more important than money 20 years later for most employees. So it's very important to craft that communication effectively so that everybody appreciates what is being done and why it is being done. Now, while we discussed the implications of communication on the larger employee base or the worker base, um, what is the implication on the training, particularly of the HR folks within the organization? How should a CHRO look at that? What actions are required? Why these actions are required?
Yeah, so training from the fundamental definitional change from employee to worker to the wage definition change, and some of the critical changes like for CLRA. I thought I'd just throw that also into the debate. So that training under the contract labor, the new OSH provision says that you cannot engage contractors in core activity, right? All of this has its own implication from a perspective of understanding by the HR and IR team. And I think it is more than that. Even the functional line managers need to understand this, because the guy might go and discuss this with IR. He may have understood, he may not have understood. He will come and show the wrath of that on his line manager, right? So you need to be very careful. Even line managers, I think at all levels, training is required, and they need to really grapple with as to what has changed, what is the implication on a conceptual basis, or also on a very individual employee or take home perspective. Why is it impacting him, and therefore how do we communicate this to him, right? For example, gratuity. Today morning, the same conversation, I said gratuity, we normally kind of do a notional valuation and impact, include that into CTC. I said impact will be very high. How are we going to pass it on? No, then see, it's a total benefit concept, Madhu. So gratuity, if he saw, and in fact, she threw an interesting another angle to it. Now that his more money is going, probably somebody who at the third year or fourth year might be tempted to remain, because he's end up getting higher gratuity if he remained with me. That's a very interesting angle. I think that's also, that means that also has to be kind of included into the communication, so that if there is a 1% chance of retaining a Madhu Damodaran beyond 4 years into the fifth year, probably there is an opportunity here.
No, absolutely. Very well said. Now, you raised a very important point, Madhu, a minute ago, which was the difference between core employees and non-core employees, the core business activities versus not, and how that affects the kind of contractors that you onboard. Can you expand on that a little more?
Yeah, it's very critical change, Rishi. I think industry needs to understand that. Unfortunately, today in manufacturing, almost 70 to 80% of workforce is in contract labor. Whether it is good or not, of course, it is for each individual employer to take a call, and then probably it has a lot of other impacts from perspective of availability of workers. But when you have such a heavy component of workforce which is there, obviously they are allowed into core activities. So what is that? This is new, not new actually. In 2002, when Telugu Desam government was there in Andhra, in the unified Andhra Pradesh, is when this concept was introduced. So today's our yesterday's Contract Labor CLRA Act, there was only one section which talked about how do we prohibit or abandon contract labor. So they said the government has to constitute a contract labor welfare board and then tell them this industry, I think contract labor exploited, please look into it from a perspective, is it core work or a perennial work? And then they advise the government, oh, okay, you have to, this is being exploited, so you need to, in this area of work or in this establishment or in this area location, you need to ban contract labor. And then the abandonment notification was issued. But so essentially it has become very difficult to do that, and Supreme Court has also said that if it is not for the, whether it is core or this thing, it is for overall assessment the government has to make, then only they can come up with a notification. So, but then what Mr. Naidu had done in 2002 was to kind of flip the section 10 on its head and then said, but I don't want to get into all of that. I don't want to give too many discretions to the government. I will define about 10 to 12 areas as non-core activity, which is like your cleaning and some typically administrative, this thing, security and all of that. And anything other than that activity, which is core to the business of an enterprise, will be called as core activity. Having defined that, they said, now engaging contract labor in core activity is prohibited. That's exactly replicated into this thing. But there are three exceptions to it. Exception number one being, if traditionally that particular activity was always performed through contract labor. Two, if there is a seasonal, this is a seasonal activity, so it is difficult to keep hiring and keeping them on your this thing. Then three, for any immediate business surges, demand and all of that, these three reasons, even for core activity, you can think. If you really look at it, if companies have to look, some of them might say, boss, I've traditionally engaged these workforce, for example, let's say a BFSI, which kind of has the feet on the street to go get all their forms filled and all of that stuff. I'm just saying insurance company, right? If it has been always done through contract labor, then they definitely fall into that exception. So they don't have to. But that's where it becomes very critical for the probably the purchase team, probably the finance team, and definitely the HR IR team to look at, in our workforce mix, are we employing this particular contractor and his worker in really core activity? So what happens? The license given which is valid at the time of now, implementation may continue because that's the transitional provision, but the license will expire soon. That point in time, you go and apply for a renewal of the license. The officer might throw the book at you and then say, boss, you are no longer allowed to do it. Earlier, what will you do? Boss, you show me a notification where the government has prohibited this in core activity, then I will. But now you can't do that. So that's a very significant look that every business has to look at. I think this is engaging contract labor, and this thing is not only an HR IR, but I think it is a very business level decision. So they have to really collaborate internally and understand how are they engaging contract labor and whether they can sustain, and also whether these three exceptions will apply to their requirement, and then take a very, very learned, studied decision about this.
Does fixed term employment provide a little bit of relief there?
Yes. So the government's argument, if you really look at it, when they, even in the notification PIB, not the notification, PIB information when it was implemented, was also fixed term employment is provided with no questions asked. I don't know, you are also me, we were all, when in 2017 it was introduced, it was a joint proposal with some of the unions also collaborating. Boss, let's amend the model standing order in the industrial employment standing orders to bring the concept of fixed term employment. That time industry has suggested, boss, put a cap on, if you have 100 workers, how many can be fixed term, and also put a cap on for how long can you hire. Probably you should not hire fixed term workers for more than 1 year and all that. But government that time also said, no, we don't want, we want to give you a free this thing. And now the same thing is replicated into the, as a definition into the codes without any such restriction. All that it says is that fixed term employment is something where term of the employment is defined, right? And of course, it has said that if you are hiring fixed term employment, benefits like gratuity, you need to even provide for somebody who's done 1 year of service also. But to answer your question, it is kind of government's counter to the fact that there is a lot of contractualization happen. Probably there is a need to relook at, and if you do that, probably there'll be a need for companies to have this also in their overall composition of workforce to manage the fact about okay, they may not need a large workforce, but then they may need for a fixed term. So that's where this fixed term employment as a concept really helps.
Now, one of the key changes that has come in is around digitization, and digital record keeping has become front and center to the whole strategy.
Yeah.
DPDPA rules have recently been notified, where there are a lot of obligations if you are a data fiduciary, or if you host data which has a lot of PII based elements. Do you think there are implications on how information gets shared with their local compliance partners, labor consultants, and so on and so forth? How should that be reviewed?
Absolutely. I think this transition, I think it is good for the corporates that both have come at the same time. And in DPDP transition, they have time in some cases up to some aspects of it up to 18 months as per the latest notification implementing the code with the new rules and all of that. Sorry, DPDP Act. And see, in the DPDP Act, what is the cornerstone of that? This thing is the digital personal data of a person if it is being taken by a data fiduciary, right, has to be taken with a consent which should be very specific. And once the consent is taken and the data is given, it has to be safely kept, and with the data principal, that is the person who is giving the data has the right to ask for deletion, or once the purpose for which it is taken is over, has the right to ask for the user to kind of delete it and for modification, etc. Now, employee for the purpose of employment is exempted from the requirement of consent. Is a permitted use, right? So but then that doesn't mean that the employer will become a data fiduciary of my data if that is given to my employer, and I become the data principal. So I have all those rights. Should my employee data to be kept? Should my employer data needs a correction? I have the listing. I have a right to ask for a deletion, right? So now, and what happens in real HR is that we share the employee data, I would rather say indiscriminately, with all kind of vendors. He could be a payroll processor, or you may be this is thing who has given you the HR probably services, and then of course the compliance partner who helps you with calculation of PF or submission of your returns. But you know what? More than if you are passing on the data to a payroll processor today, there are mostly it is soft copy, probably through an API and all of that. It is easier to ring fence it from a DPDP Act requirement perspective. I unfortunately don't think that's what is happening from a compliance provider perspective. You just, and this gets passed on sometimes, unfortunately, at the lowest level of an employer. Some assistant manager, somebody sitting there, he is dealing with the consultant, and then this data gets passed on. It has all Aadhaar number, you ask for PAN number, PAN number, everything is there. All of them are digital personal data of your employee. And what guarantee is there that is being used, that is not being used, or what guarantee is that nobody will do it purposefully, but do they have systems and processes? Because this might go sit in the somebody else's laptop in the compliance provider, and how are you ensuring that he has the ability to delete it and hide the Aadhaar data as required and all of that stuff? So this is a very, very critical aspect. And as the government moves into more and more digitalization, that's another objective of the courts, where they want to look at all compliances being performed through digital. And this will easily digitize, and then it will be, then if the compliance processor doesn't have those systems and processes in place, I think it will be a disaster waiting for many of the employers if they're not careful about it. So it's a good opportunity to do the transition totally in sync with the DPDP Act transition also, and with the transition into the new codes.
It's very important to look at your compliance service provider, make sure the information exchange protocols. I mean, most of the HR folks typically use email to share these spreadsheets, which they think are secure, but email is not a secure mode of communication. It can easily be intercepted. This data is at risk and vulnerable. So how this data is being exchanged, who has access to it in your service providers organization? So is there a need, Madhu, to review the contracts with your service providers?
Absolutely. You really need to look at all your service providers from a DPDP Act perspective, because the DPDP Act itself says the data fiduciary, if he passes on any of this data to a data processor. In our case, all HR service providers, payroll, if you have a HR portal which you are subscribed, and obviously consultant, compliance consultant, and all of them, all will become data processors. And any such contract between your data fiduciary and data processor should have proper contractual elements in your contract. Ensure that he takes on the responsibility to help you comply by the DPDP Act. We have
Absolutely.
to definitely look at the
So
contract.
while there is no direct implication of one over the other, but while you're making the transition, HR fraternity is a big beneficiary of some of these changes, and they will need to bake it into their planning process so that sooner than later, when the DPDPA team comes and talks to them about all of this, they actually have a plan around it.
Yeah, it's actually important, like all of the government approach like that. It should be all of the company approach, because you will have to include your CTO, you'll have to include your CFO, you'll have to include your chief legal officer. All of them together has to do a lot of transitioning thought process in this. Yeah.
Well, great. I think we are past the hour, a minute past it, actually. I'm seeing a lot of comments from our participants today, so which basically means that many of them are already thinking and planning through this transition. We've discussed a number of points today, right from the difference in definition between a employee and a worker, and how that drives all the downstream actions and um, compensation structure, how that needs to be done to make sure your liabilities and your other items around statutory calculations are done correctly. We've also discussed employee communication, internal planning, team training, and so on and so forth. We've also discussed core versus non-core activities and how you can look at your contract staff in a better way to leverage them appropriately. We spent some time talking about fixed term employees as well and the benefits around that. So a lot of good points were discussed. Hopefully, some of you did benefit from this dialogue. We will continue to have a bunch of more discussions on specifics of the implementation strategy, get deeper into some of these items so that many of you have a little bit of food for thought to craft your compliance journeys in a more compliant manner.
Rishi
Well,
sir, this is Satya here. There are about 140 odd, 20 odd questions that are there. If you and Madhu sir have another 15-20 minutes that we can extend the session, we could take some selective questions and then put the rest in an FAQ document and push it out. But again, depends on how you and Madhu sir are placed in terms of time.
so we can certainly extend it by 15 minutes. Look at a few questions. I'm just scrolling down. Just bear with me, Madhu. You can also look at Q&A if you find something. There's a question: will gratuity be applicable for a person on FTE who is 62 years of age? That's a very specific question. Do you want to take that?
Yeah. So yeah, it all gratuity. If 62 years, if you hired him as an employee, but if he is normal employee, which is the open-ended letter without a fixed term, then he or she will be eligible only if he has put in that 5 years of service as required and as required currently under the Payment of Wages Gratuity Act. Not it's not currently. Now it is as required under the Code on Social Security Act. But it's not clear whether that 62 is a fixed term employment. If it is fixed term employment, then as I said, somebody completes 1 year of fixed term employment, he is eligible for gratuity for that 1 year.
There's another question by Soumya Shetty. Is the gratuity change with retrospective effect if an employee has resigned post 21st November? This is something I think we already covered, but do you want to talk about that?
Yeah. So as we discussed, some of the provisions don't need the rules to come and give effect to, because the Code on Social Security, if you look at the section that says about repeal, it is on 164 says immediately the payment of gratuity is repealed, and the new section as the date it is notified it is coming to effect. So therefore, somebody who's leaving your employment even tomorrow, has your gratuity payment should be as per the new wage structure.
Looks like there's a lot of interest, Madhu, on gratuity. I'm finding multiple questions on that. We might want to plan a different session on that, but there is a question by Suresh Kumar which says gratuity is compulsory for FTEs. What about the regular employees if they have completed 3 or 4 years and not completed 5 years?
No, as I already answered, for regular employees, that is in his appointment letter, there is no term mentioned. Then he or she is eligible only after completing 5 years. But we all know the other aspects like 240 days if the 4 year has been completed, because that particular provision or which defines continuous service is just cut paste copy into the code. So that will also have to be considered. But if you have completed only 4 years, then you are not eligible.
There's a question which says, are only worker category eligible for overtime under the codes, or even employees are eligible for overtime?
Interesting question. If you take code on wages, which I said applicable only to employees, has a provision for overtime, right? It also has a provision for defining working hours and all of that. If you look at the central draft rules, and which is copied by most of the state rules as well, they have also mentioned that 8 hours and all of that. Therefore, if you read the provision, even an employee is eligible for overtime, but there are few of my counterparts in the legal fraternity who are interpreting that because that is related to minimum wages. So only if there is a minimum wage notified for them that this will be applicable. So that's there is a little bit of a discussion going on that. If you look at the government's press release, they have clearly called this out. Under the code on wages, even an employee is eligible for overtime. So you need to be so you know where the government's thinking is.
Pratima is asking a question: will a permanent employee will also be eligible for gratuity after 1 year of employment?
See again, permanent employee, if she is not in the appointment letter, if it is a fixed term employment, then he is eligible for it after 1 year. Otherwise, no.
All right, I'm continuing to look at some more questions. Is overtime wages in the new code applicable for employees who are earning wages greater than 18,000?
Yeah, so if you really look at it overtime, I already answered in the context of code on wages, but if you look at code on social security, occupational safety, the provision relating to overtime is made applicable only to workers. So technically, that is the reason why there is this argument. Some of the legal fraternity, some of my colleagues in the law legal fraternity are arguing the code on wages provision for overtime is not really for all employees. But we will have to see. But if you only read OSH code, yes, overtime is only for workers.
Anandi Subramaniam is asking a question. Wage limit in wage code for workmen is 15,000 and the limit in OSH code is 18,000. What is the wage limit which needs to be considered?
No. So I think that is when a supervisor becomes a workman or not, right? So if there is a supervisor whose wage is 15,000 under the code on wages, then he is a worker. If his wage is above 15,000 per month, then he is not a worker, he becomes an employee, right? Similarly, for Social Security and Social Security and IR code, it is 18,000. I think this is purely because of the fact that code on wages got passed in 2019. The other three got passed in 2020. By the time government thought, okay, that is too low, right? So that's the only reason I said. But this 15,000 and 20,000, 18,000, as we discussed during the conversation, does not have a direct impact on whether one is a worker or not, right? Because it depends on what is the role. Whether this 18 and 15,000 is only for a supervisor, whether he follows, because which clearly then he needs to have a couple of people reporting to him. He is supervising two, three below him, and then his salary is below 18,000. Then he is a worker. Otherwise, he is not a worker.
There's a question by Manoj Jain. If we have factories in different states, then which code is applicable, center or state?
No.
So I
There
think
is
this is
only
a
one
question,
code.
Madhu, on appropriate government.
Yeah, right. So right now in a factory, what is happening? We have the Central Factories Act, and then each state has its own factory rules. correct? And the same thing is going to happen. So the Factories Act have been subsumed, and then it is now under Occupational Safety Code. And what if you really look at some of the draft rules for each of the states, for Karnataka, they just cut paste copied the Factories Act, Factories Rules Karnataka into the rules for the OSH code. So to answer this question, the act is the same. You will have to wait for your particular government's, state government's factory rules or the OSH code rules for factories. So that then accordingly you need to this thing. I don't really see them being too different. Probably some of the overtime limit over a quarter, UPS said 125 hours and all that, those kind of things might change.
Interesting question from someone who says, are professionals like clinicians who are appointed under the fixed term contract and paid fixed wages be entitled for benefits similar to permanent staff?
Yeah, this question came up in my conversation with with the CHRO in the morning, right? See, I think some of us are getting confused between an employer-employee contract and a professional service contract. What do you mean by professional service contract? Like, for example, you hire me as a lawyer, right? You have a professional service contract with me for me to provide you legal services. So that's clearly in the contract itself. You would have said, I am not your employee, and my employees, if at all I hire and provide these services, they will never become your employee, right? That is done. So similarly, like that was an example of this thing. Let's say a tour management company, they engage these tour guides in various countries, or sometimes Indians go and help them, and they're all hired based on their expertise in managing a big group in a particular country, and therefore they hired as professionals in that area, and they're not employees. So these codes are not going to impact anybody in that category, right? Only non-employment related this thing will be impacted is platform workers and gig workers who are hired by the aggregators to render services. Only them it will be. Other professional contracts where you are seeking experts and all of that to engage them through your this thing, where income tax also plays a role. Your finance department will not be deducting TDS from their salary on a 192 basis, but 194 basis, right? They are all independent contractors. So I don't think you need to really worry about it. But only thing is that if you're disguising normal employment using such a contract, then you'll be in trouble, which is the case even today, whether the codes are there or not.
Malika Nair is asking, will PF Act's base salary of 15,000 still remain?
Good question. So, in a transitional provision, what I was referring to in Code on Social Security, all that is, which is the EPF scheme and all of that, will remain as if notified under the code. And therefore, this 15,000 is also limited. So, as of now, it is 15,000. But as a member of the CBT, I can tell you there are serious discussions going on because it has not been increased for more than 10 years now, September 2014. So they are saying inflation itself has taken this number higher. We should have this thing. So a lot of discussions, even up to 30,000 is being discussed. For the time being, though, it is 15,000.
Priya is asking, does it mean now female employees will get maternity salary on 50% of the gross and not on the entire gross?
That's an unfortunate implication of the new definition of wages. So today, all maternity benefit, what normally employers do is they just pay the normal salary and then consider it as paid, right? But now that, because wages definition in Maternity Benefit Act today includes everything. But at the same time, now that it's a common definition, that's an unfortunate impact. Now that it is going to be a discretion of the employer, how do they want to do it? Because if they continue as is on that particular aspect, there is no cost implication.
Pratima is asking, if we have someone working on 11-month contract, will they also be considered as a fixed term employee?
Yes, if your contract defines a term, then it is a fixed term employee. And that particular employee, without renewing and all that, you continue to engage him for more than one year, then you'll have to pay him gratuity.
Uttiya, in a number of questions, people are asking for clarification of worker and employee. There's a question by Priya Thakur where she's asking for the workforce classification definition. I think as a part of our FAQs, we should plan to publish it.
Yes, sir. Yes, sir. All the questions have been noted. There will be a very detailed FAQ document. There are more than 100 plus questions that are there. So we have to go through them minutely, prepare a response, get it validated again by the legal team, and then we will publish it soon. We have the email IDs of everyone who has registered, and we will share the link of this webinar, the PPT if necessary, and the FAQs shortly.
There is a controversial question by Maheshwaran Tyagarajan. Considering the increase in CTC, will the employees be denied increment for the next year?
That's not, see, there is no law which says that will not be paid increment. So it's always, has always been, it's the discretion of the employer. And let's wait and see.
Dinesh Pal is asking, for managerial employees, what should be considered as total wages, the gross salary or the cost to company?
I see the cost to company has no legal basis. So if, for example, if gratuity is also considered, so it will not reflect in your gross wages because that's a cost at an estimated cost somebody has included in it. So for all purposes, for wages in this thing, it is your gross wages that has to be taken into account, including all your other allowances, how your pay structure is as all those allowances.
Another concerned question with a lot of anxiety, Madhu, on gratuity. If a person is leaving in a few days this month, will gratuity needs to be paid as per the new wage definition? Will organizations get time to recalibrate?
Unfortunately, yes. Code on Social Security is effective from 21st November. Implication of that is that the wage base for gratuity is as per the new wage definition.
A question from Pratima Srinivasan: is insurance compulsory for all employees who are not a part of ESIC?
No, it's not compulsory. Except for employees compensation, or earlier what is called workman's compensation. But it all depends on whether your employees are covered in the schedule, which is just replaced into the Code on Social Security. So other than that, the hospitalization insurance, which is what is comparable to ESIC, is not compulsory.
More of a policy question. Labor falls under the concurrent list of a constitution, so do the state governments have to consent?
State governments cannot consent, need not consent, right? State governments, if they really want to go against this, they need to pass separate law, and then in their assemblies, it has to go to the governor. Then governor will not be able to sign that off because it is in when there is already a central law in that place, in a space like that, in a concurrent list, then it has to be signed by the president. So it has to go to the president, and president has notified. This is the provision under the Indian Constitution. So if the states want to take that effort, they can always come up with a new law, and then they have to go through this process, right? But otherwise, what is the state in control of is that appropriate government, they have the right to come up with rules for each of the codes. So that is where we have been saying that many of the states have published the draft rules, taken our input and employees unions input, and they are almost ready to finalize notify the final rules. So that's what we are expecting them to do.
Pooja Mandhare is asking also for the fixed term employees, in case they are paid a lump sum amount monthly, then how will the gratuity be calculated?
On the entire amount.
So that was easy. Is it PF contribution threshold of 1800 remain the same?
Yeah, that 15,000 remains the same. So 24% of.
All right, I think we've covered majority of them. Uttiya, we are 18 minutes past the hour. I think we should publish a FAQ basis all the questions, interesting questions that have come up. I really think there's a lot of concern in the ecosystem around transition. Everybody agrees that the reform was long pending, and it's so good that the reform is finally here. But as they say, devil lies in the detail. So here's a time when all the folks in the fraternity will need a lot of help and support. At Team Leads Regtech, this is what we do. We have a 250 people organization focused around the subject of labor compliance, a lot of experts on labor compliance. So reach out to us in case we can become a partner for you to help you through this transition. There are a whole lot of things that we can do, right from helping you with definitions to helping you structure your salary correctly, helping you review your computations around statutory computations, all of them. reviewing your contracts, reviewing your contract worker contracts, and so on and so forth. All of these are areas where we as a firm can provide the necessary help and support. So Madhu, you've been great, constantly talking. Grab a sip of water. This is a long-standing conversation. We will need to do more of these to make sure that sufficient information dissemination happens. So let me, on behalf of everyone here on the call, thank Madhu for being gracious and providing all the necessary insights. We really appreciate it, Madhu. Thank you so much for your
Thank you
time.
very much.
We still have 720 people logged in. So I'm assuming that the discussion was relevant and fruitful. So audience, thank you so much for being so engaged. Over 100 questions tells us that we need to do a better job in communicating with you, publishing the relevant information. So thanks a lot. We look forward to engaging with you soon on a detailed topic. We will pick one or two of the topics that have become central themes of the questions today, and keep your eyes peeled for this space. Hope to talk to you soon. Thank you.
Thank you. Thank you, everybody.